Thanks for joining us here on a Monday. I'm Marlin Bohling with you as we open up our grain and livestock market action and take a look at our second half hour of trade with a little in-house expert help. This time we have Chris Swift with us, and he is with Swift Trading Incorporated right here in Nashville. Thanks for coming on in.
Absolutely.
I appreciate that very much.
Yes, sir.
Let's dive into this.
I'm ready. It's good morning. Looks like all green on the screen.
On the grain side, a lot of plus signs today. So let's go ahead and dissect this here, if you don't mind. We'll go to the corn board first. And we started out about double the gains, Chris, from what we had seen overnight. We were higher about 3.5 cents overnight in the Globex trade. We opened up about 6 higher. And right now, September corn is up 5.5 at 367.5. And now December new crop corn up 5.5 at 381 3/4. So maintaining those firmer tones there. And then if we take a look at what's going on in our soybean market right now, we have been higher there too. August now 5 3/4 higher at 876 1/4. That one goes into delivery tomorrow. September up 6 1/4 at 881.5. Check that 881 3/4 now. It just ticked upward a little bit. November now 6 1/4 higher at 891.5. And in the wheat trade, big moves in wheat to get things going today. We have September Chicago wheat 19 1/4 higher, Chris, at 549 3/4. And in Kansas City, we also have some big moves. We have September going up 18 1/4 at 550 3/4 per bushel. Meanwhile, Minneapolis wheat has been strong. We have September up 17 3/4 at 610 1/4. By the way, the cotton market had a good start with December up 131 points at 89.62 cents per pound. It's knocking on the door of 90 cents once again. All right, Chris, I turn to you. What's your analysis here of your first impression that we have seen from the grain trade? It seemed to open stronger than what the penny calls were early. It did, and we got some gaps up last night. Corn came back and filled that gap last night, so we don't have to worry about the market coming back down to it. But, you know, in the corn market, 387 3/4 is going to be a real interesting target. We took out 380.5. Which was a little stopping point that we had on the way down. So when we reach the 87 3/4, I think we'll have a reversal in that market. How did you come up with that number? Those are just price points from the way down. When we took the elevator down, and now we're going to ride the escalator back up again. So I think as we start taking out those previous floors that we had built there, that shows very good support for the market. And that's on the corn side. That's on the corn side. Now on the soybean side, we had the big news that broke last week about maybe eliminating tariffs between the U.S. and the EU. Yes, they're not as big a buyer as China by a long shot, but still, do you think that that will help bring China back to the table a little bit? It will. Clearly, we have some issues with the tariffs on there, and I think that everybody wants them resolved. Everybody wants them resolved. So the quicker that we can get that done and whatever factors that we have to put in there to it to bring it to a close quicker, I think the better off it will be. A little bit of nervousness in the trade about the weather going into the first week or two of August. It's hot and dry out there. It truly is. And anything that's not irrigated, and especially second crop beans where they came in after wheat, we know how bad that the wheat had it, so they've gotten no relief out there in some of those areas. So if it's not irrigated, it's already in bad shape. So if someone is not totally booked or totally marketed on their new crop soybeans, they're just kind of sitting on their hands right now, do you think it would behoove them to maybe be a little more patient? Well, I think you have to be, because if the tariff issue is resolved, I think China has to have our beans. So it will come to fruition that we'll see significant demand increases once these tariff issues are resolved. And what you don't want to miss out is a 40, 50 cent pop right off the get-go, even if it doesn't hold. You know, news like that could spur it. And then in the wheat market, now we're bumping up against previous May highs. The May high close on Chicago September was 559 3/4. We're within a dime of that today. So if we start taking those highs out, now we're saying that whatever transpired previously is of no longer in effect. And tomorrow is the end of a trading month, too. Yes, it is. Always makes for an interesting trade. All right, we'll come back in just a moment. Don't go anywhere. We'll take a look at our cattle and hog market activity when we come back. And we're back with you talking with Chris Swift of Swift Trading Incorporated, based in Nashville. He's joining us in studio today. And Chris, I want to take a look here at our livestock segment. Okay. We'll start with the live cattle trade, where we did not have a very exciting start, but it was fairly flat. Here's a closer look right now. Well, Yeah, we're higher and lower. We have August live cattle, 26 higher at 108.88. We were talking about this a little bit ago, Chris, where the August, let's see, this goes into delivery on August 6th. Is that correct?
That is correct. I think it's first notice date.
Yeah,
yes.
so we're about a week away from that. So we have the October contract getting more and more of the volume here. We have it 3 higher. That's only 1 tick higher at 110.50 per hundredweight. In December, 13 lower at 114.02. And then the far out deferred's about 3 ticks higher again. On the feeder cattle trade, let's take a look over there. Now here we're lower across the board, but not by very much. Nearby August only down 25 cents. We're at 152.05. And September down 18 at 152 even per hundredweight. October down 17 at 152.63. They're all bunched together here, Chris. We have August all the way through November. That's 4 contract months, all 152 something. Mm-hmm. Is that totally unusual to have them that close together like that?
You know, the fall months kind of have a tendency to stay together. It's when you deviate to the spring months that you see greater deviation than what we have right now. But the spreads are pretty tight between all of them, and I think that shows for a very firm feeder cattle market going forward. Interestingly enough, USDA came out last week and showed really high levels of cow kills, 11% higher in every region and more in some regions. So we've got the drought that Tim was showing in the west there. They're having to move a lot of cows out of there, and that elevated cow kill is just going to not help us any at all.
If we were playing darts, they would say good grouping.
Yes, that's exactly right.
They're all about the same price.
That's right.
All right, let's take a look at the lean hog trade. And on our lean hog futures right now, here we go. We have the August up a dime now at 63.75, and October up 87 at 51.75. That's interesting. We had a low of 50.78, so we've already come back about $1 off of that early low. December up 67 at 47.12. That's the one that made new contract lows yet again on Friday, yes. And now it's trying again to climb out of that hole.
It's trying to. The conversation between Mexico and the U.S. on the tariffs there has helped a little bit. So I think the renegotiations of the issues that we have with them will at least keep the hog market from plummeting further. And with a $35, $36 spread between the basis right now to December, that's already taken in a lot of fourth quarter pork production.
All right. Well, thanks, Chris.
Absolutely,
Appreciate that very much. Chris Swift of Swift Trading Incorporated, and he is based right in Nashville.